There we are. I always find it works better when you turn your microphone on, don't you? Anna, of course, can hear me and you can't.
No,
Oh, you couldn't hear me. Can you hear me now?
Yes.
Brilliant. Okay. Apologies. Just to recap, I've started with the pound yen for a specific reason because, let's just move that out of the way, because it just reinforces this whole business of support and resistance, both from a price-based perspective and also from a volume-based perspective. If we go to the multiple CSIs just to pick up on what everything's doing across the time horizons, move that out of the way. This is on 3 minute, this is on 5 minute, this is on 10 minute, and this is on 15 minute. And what we're seeing right now is we've got, there's a fair amount of currencies moving in the same direction. Yes, we've got buying of the pound, the yellow line, so we've got buying of the pound, we've got buying of the pound here, and we've got buying of the pound here. But in terms of the yen, we've also got buying of the yen. That's on 3, we've got buying on 5, we've got buying on 10, and we're starting to see that kick up on 15 here. So in terms of the pound yen, what we are seeing across, certainly across the faster time frames, and in fact it goes right the way out to the daily, where we've been in congestion for some considerable time now. When you see the two lines moving in the same direction as they are at the moment, then there's going to be no trend, because the two tracks, if you will, the analogy I've used many times before is of two trains on two parallel tracks. If they're both moving in the same direction, there might be some differential speed between the two of them. Imagine them pulling out of a station, but there isn't going to be that divergence where you've got one rising currency and one falling currency, which is going to create that strength of trend. Now, in terms of what we're seeing at the moment, if we're looking at the Aussie rolling over here, in terms of Aussie dollar, in terms of pound dollar, where you've got pound rising and Aussie falling, then you are going to see momentum in that trend, because you've got one currency moving in one direction strongly and the other is moving in the opposite direction. So they're opposing one another and creating that differential speed, if you will, or closing speed. If you use the train analogy, you've got one train closing on another, one going in one direction and another, then that's, you've got closing speed, which raises the momentum of the trend. So we just go back to where we are with the pound yen.
Sorry, could you just answer one question about CSI?
Yes. Okay. Just to break for a moment, to answer Frank's question, is this a sign for reversal, or must I look more on the hour? Frank, it comes back to what your time window is, your time horizon. If you're looking at the 5:15 an hour, that's fine. Then clearly you're looking at that. If you're looking at that for a reversal, you've got to understand that what you're going to see in a 5 minute in that context, imagine it this way, if you will. Right, 15 is your trade time frame. Okay, fine. Your focus chart, if you will. So what you're going to see on a 5 minute chart in that context is obviously 3 lots of 15. Now within that period of price action and going up to the hourly, you may well see oscillations on the 5 minutes several times to overbought and oversold, which are only reflected on the hourly in the sense of a pullback or a reversal. And it's just, that is what you have to keep in mind the whole time, that what you're seeing on your fastest time frame, on your 5 minute, in your case, you may well have a complete cycle for a scalping trader going from overbought to oversold and back again. Yet on the hourly chart, all you would see is perhaps a minor reversal or a minor pullback. And that's the concept that you have to keep in your head the whole time. And it's why you have to have a focus as you've got the 15 minute, which is fine. So when you see the 5 minute is oversold or overbought, that's fine. That may well be going in your direction. So if it's at the top and it's starting to fall, and that is the direction you want it to go in, that's fine. But at some point on a 15, you're going to have to accept that 5 is going to bottom out. Now it may well reverse and go all the way back up, but then you're up to the hourly chart to get a sense of what is going on across into a slower time frame, and whether what you're seeing on your fastest time frame is actually going to develop through into the 15 and ultimately through into the hour. That is a concept that is applicable to all charts, whether it's currencies, whether it's indices, it doesn't matter. It's that constant oscillation. It's more pertinent to currencies because, as Anna said at the start, this is a market of mean reversion. Currencies are constantly oscillating from overbought to oversold and back again. So you always have to remember it in the context of, in fact, if I pull up the multiple CSIs again, let's just probably make the point more easily. There we go. Okay. Let's change this up to 60. Okay, so we've now got 10. Okay, well, let's change this to 15. There we go. So we've now got 5. So we've got 3, 5, 15, and 60. So if that's your time horizon, then what you're seeing right now in terms of your 15, you've got the pound rising on 15, you've got the pound rising on 5, which is fine, and it's starting to kick up on 60. So in terms of buying the pound, and you've also got it over here, the first thing that's going to happen, if this is going to reverse on the 3 minute, is going to reverse here. Now, if that's a strong reversal, ultimately it will go through to the 5, and ultimately the 5 will transition as well and start to force the 15 down. In terms of the 60, you're not going to see a huge amount of reaction to that. But ultimately, obviously, if the 15 starts to transition in an opposite direction, if you're long this and then it starts to go short, then that is going to kick down over here as well. But it's all relative to the time. So it just depends what it is you are trying to do. You always have to accept that this is a market of the analogies we've used over the years are the Russian dolls. Imagine all the little dolls, one inside the other, and they go from very large to very small. On the program, we've used concentric wheels where you've got wheels within wheels, where you have the smallest wheel in the center is maybe going in one direction, the wheel next to that is maybe going in a similar direction, and then gradually come out to maybe the hourly where it's going in the opposite direction. And you've constantly got to unpick that the whole time and understand that what you're seeing on a slower time frame chart for you as a slower term trader is delivering an opportunity for possibly a full-blown cycle, if you will, on a 1 minute chart or a 2 minute chart where a currency has gone from overbought to oversold and back again. But in terms of you as a 15-minute trader or a 30-minute trader, it's irrelevant because to you, all that is just a pullback or reversal in your longer term trend. And that's what you have to carry in your mind. And that's what makes trading difficult because it's a concept that's not easy to grasp. And it also, when you have all these time frames up, it can make you nervous, which is why you need volume to confirm what is going on. Is the pullback you're seeing or the reversal you're seeing, is it a true reversal in trend from primary to primary, from bearish to bullish or bullish to bearish, or is it simply a pullback and reversal which will be signaled with volume? Because if you're seeing the market rise, if you're seeing a pullback against and the volume is not in agreement and the volume is actually telling you, hang on a minute, this is not a full-blown reversal, this is just a pullback, don't worry about it, then that confirms what you're seeing on something like the CSI in terms of the reversal of on a faster time frame, which may well ultimately filter through into your time frame that is your trading focus. But if it's only a reversal or a pullback, then it ain't. And that's hopefully explains the concept as simply as I can. Hope that answers that one for you, Frank. Sorry, long answer to relatively short question. All right, let's go back to this. Okay, this is on the pound yen. They were traveling together, and this is what we're seeing. And probably if we go down to something like the 10-minute chart, when we were getting going this morning, and just to pick up on the question from, who was it earlier on? Gene, about timeframes. It is one of the beauties of Ninja. It prints real time. So we are now 8:19 UK time. This was 8 o'clock. This was the London Open. So it's much easier on Ninja to pick out where we are. This is European Open. This is London Open, etc., etc. Yes, the MT45 platform, it's a bit of a pain in that sense in terms of the timestamp, which is generally 2 hours, as I mentioned in the chat box. Okay. We got going in European Open, and the first thing that came in was this. And you think this doesn't look great. This is looking weak. The market's trying to rally, but it's just looking weak the whole time. I'm just looking over. In fact, in terms of sentiment, this is what's going on. This is UK. This is UK 100. We had this little gap up at the open when Anna and I were trading UK futures full bore. We used to see this every single day. You get this little flick up, little gap open. It's just a trap move the whole time. Bang, down it goes. And that's the UK falling quite strongly. In terms of the VIX, just have a quick look at what the VIX is doing. Okay, the VIX is rising, no great surprises, up 0.6 at the moment. Just pull that over as well. This is where the VIX is going. Oops, there we are. So we've got a pretty good handle on what is going on in terms of sentiment. That's purely looking at it from the concept of UK markets. I'll hop onto the US markets in a moment. So we had that weakness coming in, further signal here, and now we're breaking lower. Now, in terms of where we are on this chart, you've got the two aspects of support and resistance to consider. You've got the price-based support and resistance, which is with the accumulation distribution indicator, which delivers these levels in terms of thickness, and it does it automatically because the thicker the line, then the greater that level, the stronger that level is, and the indicator delivers that. So here, this has been tested twice. This level's actually been tested 6 times. This level's been tested 7 or 8 times, so it's much wider, it's fatter. It gives you a very clean, very visual perspective on those support and resistance levels based from a price perspective. And then you look at the volume point of control. We're trading around the volume point of control here. This yellow line, which is the heaviest concentration of volume, as you can see on the volume histogram to the right of the chart. And that brings in the concept of volume, price, and time. When we look at the linear relationship down here between volume and price, that's a linear relationship, candle to candle or groups of candles in terms of how we analyze the chart. But when you move to the volume point of control up here on the right-hand side, what this has done in building the concept of time. So this is volume, price, and time. And basically, the longer a market is in congestion period, then the stronger will be those regions of volume, which then act in exactly the same way as support and resistance. Because if the market's going to break through those levels, it's got to move through there with volume driven into the price action, because sitting up here is a whole raft of people stranded, old orders, we've got new orders coming in there. It's just a congestion phase based on volume. And equally, as you can see here, we have this low volume region right the way through this area here, and the markets move through there swiftly. It's what we expect to see. So if the market's going to reverse, let's assume it's going to reverse, which it doesn't look very likely at the moment, purely because sentiment is against it. The yen is being bought right now. I'll just check that on the other charts, but that's what's happening because the indices, certainly the UK is falling, VIX is rising. I'll have a quick flick over on the US markets in a moment. But if the yen is being bought, the market's probably going to go lower anyway. But assuming it was going to go higher, what has the market got to break through? Well, first of all, it's got to break away from the volume point of control itself, which is this yellow dash line. So we're in a congestion phase anyway, because we're trading around what is the fulcrum of the market. And you can think of it in terms of a seesaw, where at that point, the two participants are weighted they are the same weight. So the seesaw doesn't move one way or the other. It just sits there in equilibrium. But if someone gets off one side and is heavier, then the market is going to move because it's got momentum, it's got sentiment being driven one side or the other. So if this market is going to break to the downside, we want to see rising volume under a down candle as they develop in groups. So we want to see heavy selling pressure and enough to drive it away from the volume point of control, which then becomes a breakaway trade. But in terms of breakaway trade to the upside, what would we be looking to breach? First of all, we'd have to get through this level. Then we've got another level here. If we get through those two levels, we're pretty much into clear water because this is a low volume region. So in terms of a price-based resistance perspective, the market should move through here very quickly, which is what we need to know as traders, because if we're seeing this market break through here, and we've got all this up here, which is very lightweight in terms of volume and very little in terms of price-based resistance up here, this is a relatively inconsequential level. Then from a trading perspective, if we got through here, we've got a very nice wedge of support below to place our stop loss somewhere protective. either below this level or somewhere down here if it meets our money management rules. And in addition to that, we've then got a very clear region, a nice run at price. Just move the chat box out of the way. A nice run at price from something like 60, maybe up to 85, maybe up to 90 before we expect the market to hit some resistance again and start to run into difficulty. So from a trading perspective, it's all about using the information on the chart to deliver what you consider might be a reasonable return for the money that you're laying out on the table. So once the market breaks through 55, maybe up to 60, you know, is 20 or 30 pips enough for me, given that I may have to lay out 20 or 30 pips to the downside? And that's the way to do it. And it's just all based on support and resistance using the two key indicators of accumulation distribution and the volume point of control, which work in the same way from a support and resistance perspective. And this is down onto the daily. And again, exactly the same principles apply. Have this solid wedge of resistance up here, a lot of volume sitting around there as well, because we had an extensive congestion phase building. We've got a low volume node in here between, it's quite a wide range, doesn't look much, but it's quite a lot. It's probably 150 pips in there. It's between 139.50 up to 141 odd. And then we've got this congestion phase I mentioned earlier on, which has been building remorselessly on the daily time frame. And at some point, this will break down, and it will then become a great opportunity for a congestion stroke breakaway trading opportunity. But if it breaks to the downside, it's got a hell of a lot of volume to work its way through. If it breaks to the upside, it's got less as it gets up to 137 odd and beyond. And the other point about this chart, which is self-explanatory, but it's something that we've been banging on about really ever since volatility came into the market. The volume here really does describe in a perfect way the opportunities that you have to take once you get volatility in the market, because those are the days and weeks when you have volatility, you have very strong trends, you make a lot of money very quickly. Of course, you lose money very quickly if you're on the wrong side. But those are the days that you really have to maximize what you're doing, because the days like today, and indeed yesterday, other than particular examples, but generally speaking across the markets, it was a pretty quiet day. I don't think there was any news of note yesterday. I think today is shaping up possibly to something similar. The sentiment has drained away from equities, so there's no big swings in risk on, risk off at the moment. So that's what you're dealing with. So it just describes, this chart, in many ways what we're now seeing. We're seeing the draining away of volatility. We've seen it expressed in terms of massive injection of volume over those few weeks it was in play. And those were the weeks when it was key to make money. Doesn't mean you have to trade huge size, but you've got to get in there and trade away, you know, maximize the day as it stands, whatever you're trading, whether it's currencies or anything else, and just maximize the potential. And I've said this many times, and Anna said it many times also. Over the years, we've spoken to many floor traders, and they say exactly the same thing. Most days, it's just pocket money, it's small change, it's up one day, down the next. But when you get these, sorry, darling? Yeah, jobbing pips. And when you get the big money moves, big market moves, you know, big moves in any market where it's fast moving, it's rampaging, you've got to be brave and get in there and just load up and make as much money as you can as quickly as possible, because those days don't come along that often. They are the rarity. We've seen a whole bunch of them over the last month and a half or so, which has been fantastic trading. I'm going to move back to Anna now.